เทส
Good morning and welcome everyone to the session for Siam Wellness Group Public Company Limited. My name is Naren. I'm the Executive Director of SPA. So first of all, I will go through the overview of the company, how we are doing in the past year and what's the next step for us. So Siam Wellness Group, we are the first and only spa company to be listed on the Stock Exchange of Thailand at this moment. Our main business is in the spa business. We operate 3 spa brands under 3 different segments, namely Rarin Jinda Wellness Spa for the 5-star segment, our flagship brand Let's Relax for the 4-star segment, as well as a Ban Suan massage brand for the 3-star segments. So all of this, we have together 40 branches inside Thailand as of the end of last year, and 1 branch is overseas in China. I'll tell you more details on the overseas project in later slides. Apart from the spa business, we also operate a massage academy certified by Ministry of Education to ensure that all the staff are standardized in the services provided to the customers. We also have a subsidiary doing the spa products business, where we transform the professional products we use in the service to a retail version. So this is an add-on revenue for us. Moreover, we also expand a little bit into a wellness spa resort and restaurant in Chiang Mai. So as of the end of last year, as I mentioned earlier, we had 40 branches inside Thailand and 1 branch overseas. Our major growth is still in the Let's Relax, our flagship brand, where we started the business back in 1998. It's a boutique day spa located in shopping malls, in hotels, 4-star, and in standalone area with high traffic. Whereas Rarinjinda is more a premium, innovative wellness spa located in 5-star hotels and resorts. And in 2015, after we IPO, we acquired Ban Suan Massage, a local massage chain targeted mainly the local Thai, located in suburban Bangkok and in second-tier cities in the northeastern part. So this is our rough growth. Since we IPO in 2014, we've been growing quite aggressively in the past 3 years, growing at a rate of around 10 branches per year. Okay. Tourism is one of great indicators of our business, given that 75% of our total customers are foreign tourists. So tourism in Thailand has been growing quite well in the past 5 years, despite several events that affected the overall environment of the tourism. Last year, we had a total of 35.28 million tourists. 9.5 million of that is Chinese tourists, which is one of our strong market. Okay. Our top 5 has good growth in China, Hong Kong, Japan, Korea, and Taiwan all have positive growth. Okay. So on the top line, last year we were doing quite well. Altogether for full year 17, we had a full year growth of 30.21% from 739 million to 962 million. Going forward for 2018, we are targeting 25% growth in revenue. Okay. Our gross profit margin, we try to maintain between 34 to 36%. All expenses related to the branch we accounted as cost of goods sold. However, if you see the trends, it might be a slight drop from 2015, as we has recently acquired the 3-star massage concept Ban Suan, where it has lower profit margin, but we believe that with greater volume, it will help us to build the business more sustainably. Okay. Q3 might drop a little bit. Q4 also drop a little bit, as we have recently expanded quite a new branches in these few years. Whereas net profit, we try to maintain between 18 to 20% net profit margin, which we are able to maintain in the past 3 years. The net profit rate for last year was 18.48%, and we try to maintain that for the upcoming years. Okay. To see where the growth come from last year we grew 30% year on year in total sales stores. If we look at it, the spa business was the star of our portfolio, growing 30%. The resort and the spa products was quite stable, given that we had some big renovations at the hotel since it's in 10th year of the business already. So we have to do touch up in terms of the decoration as well as the electrical, water, and sanitary system. Whereas the spa products, we are in the rebranding process, where we are currently upgrading the packaging, the ingredients of the products to make it more premium and help us to be a growth engine for the next few years to come. I'll tell you about the details in later slide. Coming back to the spa, with the 30% growth last year, where does it come from? We can look at 3 angles, whether it is Ssg or expansion, brand, or location. For first, look at Ssg and expansion. Ssg last year was growing quite well, 24%, expansion is 6%. However, on a normal circumstances, we anticipate a growth of Ssg of around 10% per year, 5% from price increase and 5% from additional traffic. However, for 2017, this was an exceptional case, as there was one big project in Bangkok where we do the onsen and spa, where we opened in November 2016. So in these figures, we are comparing 12-month sales figures in 2017 with 2 months figures in 2016. That's why there's quite a big jump. So if we deduct that exceptional case, SSG is about 14% for last year, which is pretty good. For brand, Let's Relax remains our top growth engine brand, given it has quite a large scale and value for money value proposition for the guests. We had a growth of 29%. Rarin Jinda, last year we had 2 branches in Chiang Mai and in Ratchadamri under renovation, so has slight drop in revenue and has affected a little bit in terms of our gross profit margin also. But now all fully open in both shops, so we hope to pick up the sales figures in this year. For Ban Suan was quite stable, 2% growth in revenue, given that there was economic recession in Thailand last year. So domestic spending was quite stable. And looking at location, still has a good balance between Bangkok and upcountry. Last year we expanded quite a lot in Bangkok, so there's quite a big growth. But this year we also expanding both Bangkok with more focus on upcountry. Okay. Our DE ratio remains strong. Our DE is about 0.56 times. Our business is mainly a cash business with negative cash cycle. So basically we can use some of the cash from operations to support the investment of our new branches. We set the capex for this year to be 250 million, namely for new branches, 10 new branches, as well as renovations for some of the existing branches. And another 250 million we reserve for M&A opportunities if arise. It can be in the spa sector or related sector that will strengthen our brand portfolio. Liquidity ratio is around 0.93 times, which is quite stable also in the past 2 or 3 years. Our ROE and ROA is doing quite nicely. ROE we are achieving 25% ROE and 17% return on asset. For the dividend history, we have a policy of minimum payment of 40% of net profit. We have been able to achieve that since IPO back in 2014. So this year we're paying out the total of 0.12 times, 0.12 baht per share. Total 68.4 million for dividends. In terms of the outlook, we have 4 strategies to grow to the target growth of 25% this year. The first strategy is organic growth model, where we are planning to expand branches inside Thailand. In the past 3 years, we've been growing at a rate of around 10 branches per year, and we believe that this speed will continue for the next 3 years. To tell you about the size of the Thai spa industry, it is estimated to be around $1 billion, where Siam Wellness Group is the leader in the market. We have the largest market share, but it's only about 3%. So the market is very fragmented, with only few chains competing for the big shares in the pie chart, and small players with 1 to 4 branches on average. So we believe that even though the Thai spa market will not grow, we still can grow and capture the market share. For the past 3 years, it's estimated that the Thai spa industry has been growing on average about 10 to 15%, but Siam Wellness Group has been growing on a CAGR of around 40%. So we are actually growing faster than industry. That's why we are keep capturing the market share of the competitors. And I think this will remain for the next upcoming years. So for 2018, we are targeting 10 new stores. The majority in the short term will be Let's Relax, which is our 4-star flagship day spa brand, where we believe that it has quite a high margin, gross margin of around 40%. So we hope to push that to Bangkok and top tier tourist cities maybe a few more branches in Pattaya, in Chiang Mai, in Phuket, Samui Hua Hin or Krabi, as well as maybe some additional cities that we foresee there will be incoming of foreign tourists. Ban Suan will be our growth factor in the medium to long term. We believe that in Thailand, there are 77 cities in Thailand, so 7 out of those is considered as a first-tier cities. So there are international airports, good volumes of foreign tourists coming in, but the other 70 cities are mainly second-tier and third-tier cities, where there are local spending as well as tourists from other cities inside Thailand, so domestic tourism. So we believe that there's no brands that capturing the market at the moment. So once we establish a well business model for Ban Suan, I think it's the business model that we will use to capture the market share in these second-tier and third-tier cities. Apart from the organic growth model, where we normally find a raw space in shopping malls, in hotels, or in standalone area with high traffic of tourists, we also expand recently into a new model called spa operating for hotels. So basically, we are targeting 4- and 5-star hotels with existing spa facilities. Recently, given that tourism has been doing well in Thailand, many investors has invested in new hotels, especially in the 3 to 6 stars in top tourist cities. However, many hoteliers don't have expertise in running the spa facilities, as it requires a different set of management skills. We have to manage the people, especially therapists, more efficiently. Given our experience in the industry for over 20 years, we believe that we have the right know-how and the right knowledge to manage the spa. So in the past 2 years, we have signed with 4 hotels, both international chain and local chain in Bangkok and in Phuket, where they outsource the spa facilities to us. We have 2 revenue models. One is fixed rent. We prefer that for hotels that are in a high density area, where it's surrounded by many 4 to 6 stars hotels, where there are potential customers coming in from outside guests. The beauty of our brands, Let's Relax, which has been in the market for 20 years, is a great drawers for foreign tourists who knows the brand well. If they stay in walking distance or short traveling distance, it's likely that they will come and use the brand. We have changed the brand image of hotel spa, that is no longer expensive but can be value for money experience. Also under this, the second model is revenue sharing. So if the hotel is more isolated, we may require more traffic for the hotels. So we will partner with the hotels to push the traffic from the hotel guests to use the spa facilities also. So under this model, the advantage for us is that it has a low capex. Normally it's 15 to 20 million baht per branch for organic growth, but for this model it's only about 1 to 2 million baht, as we only required to do some quick refresh up in terms of the image to match with our corporate identity, for example. And this also has a quicker turnaround time compared to the organic growth model, where normally it takes 4 to 6 months after we finding the right raw space, but this one takes only about 1 to 2 months. Moreover, this model also has a quicker payback period. On average, out of the 40 stores we operate, most of it is on a long-term lease. We don't intend to own the property, except some exceptional cases where the tenants do not want to rent it out, but rather sell it out. So out of the 40 stores inside Thailand, it's all company owned, but it's on a long-term lease, on average around 9 to 12 years. So on the organic growth model, normally we achieve on average the payback period of 3 years, and EBITDA break even usually after 3 to 6 months of opening. So revenue will start covering the expenses after several months of opening, since the customers need to get to know the new location, and we are doing public relations to our target audience. However, for spa operating for hotels, we believe that the payback period is relatively high, as only a few capex are spent in decoration. So we can achieve payback period on average 6 to 12 months of opening. Currently, we are in talk with both independent hotels and with brand headquarters in Bangkok, in Singapore, and in Hong Kong to see how we can be listed as a preferred spa operators for brands. So we believe that it will have quite a long-term impact in the future of the growth of spa, given that many brands now consider having a spa as a facilities for hotel guests. It's one of the requirements for them to be listed as an actual 4 stars or 5 star or even 6 stars hotel. So I think our expertise will help push the spa facilities, not just being a facilities, but as one business unit inside the hotel. The third growth engine that we anticipate is our spa products. Currently, we only distributing through our retail channels, so through our 4-star and 5-star day spa outlets. Currently, it's only accounted for about 6% of total revenue. However, we foresee very good future for the spa products. However, in the past months, we have experienced some cases where the Chinese tourists are actually using our spa services, but buying the spa products from our competitors in nearby department stores. So recently, we have been conducted research using a third-party research house to find out why our Chinese tourists are not buying our products. So we found out that given that from our first initial thought of distributing the retail version, we don't have to pay any distribution fees to the department stores like our competitors, given that we are distributing it through our outlets. Therefore, our pricing strategy was a mid-price range for high quality products. However, our competitors are facing distribution charges ranging from 20 to 60% depending on where they are distributing, whether it be shopping malls, duty-free, online, for example. So that's why they have to set the price relatively higher than us. But the quality of our products and our competitors are not really different. Okay, we don't own our own factory. We use the OEM factory to do according to our own formula, and we manage the distribution and marketing of the products itself. Therefore, our management has considered to do the rebranding process of the current product offerings. So the top selling items are like body shower gel, lotion, some herbal products, some spa products like massage oil or the Thai herbal balls. But we want to make it look more premium, so we are able to upgrade the price via the change of packaging, as well as some of the ingredients that are no longer attractive for our target customers. For example, we recently seen trends of modern customers looking for more natural and organic products with no paraben, no SLS, no SLES, etc. So we are developing a new set of products under a new brand, ABC, to be announced later, and this will, in the short term, will maintain the gross profit margin of 60% as we are doing now, and hope to expand the distribution channels to other outlets as well, like department stores or duty free, to increase the sales. So our plan for spa products, we want to lift the spa product sales to our total revenue from 6% to 10% within 2 to 3 years. Therefore, this will have quite a significant impact, positive impact to the net profit of the group as well, if we are able to achieve the target we set. Other channels, we also recently launched into a souvenir section where we do the Let's Relax hand cream with 8 different scents represent each city that we have the locations in. whether it be Chiang Mai, there's signature scent of white tea, for example. So these ones are all available in our spa outlet shops, and also getting quite popular among the tourists who want to buy it as a souvenir. The fourth strategy is to grow overseas. We started the first part into China back in 2016 with the first branch in Kunming in the Yunnan province. However, recently, this year, we have put a lot of focus in growing overseas. Recently, we signed 2 more franchise deals in China and 3 more franchise deals in Phnom Penh, Cambodia. Why China? China has the largest number of customers in our customer profile. So Let's Relax brand is quite well known and well accepted in the Chinese market. 3 years ago, WeChat, one of the most popular social media application form, has partnered with Tourism Authority of Thailand and voted on the top tourism products and services in the minds of Chinese tourists. And Let's Relax has been voted for 3 consecutive years as the most preferred Thai spa brands. I think there are several factors that contribute to that. First is our diversification within Thailand itself. We are located in top tourist cities that are preferred by Chinese tourists, whether it be Bangkok, Chiang Mai, Phuket, Pattaya, Samui, Hua Hin, or Krabi. Second, with our boutique day spa design, we match with the modern lifestyle living of Chinese tourists. Therefore, we foresee a very great opportunities for penetration of Thai spa brand like Let's Relax into the city of China. So our 2 new stores in Tianjin near Beijing and Qingdao, a city between Beijing and Shanghai, is scheduled to open in second quarter this year. So for franchise model, we have 2 revenue streams. One is the upfront fee, one amount where we authorize the use of our brand names, authorize the use of our point of sale system, as well as provide training for local staff. We can also assist in recruitment of Thai therapists to work there if legal and regulations permit. We also provide consultation with design, operations, and sales and marketing. So we foresee quite a good future for expansion into China. Next is like in Cambodia. CRMV is another region we are targeting for overseas expansion, given that the tourism profile in CRMV is similar to Thailand. So those who like Asian architecture, Asian culture, Asian hospitality. So the trends of today's travelers, they no longer just come to Thailand, but they are using Thailand as a hub for CRMV. So they're moving from Thailand to Thailand +1. So they might spend a few days in Bangkok, Chiang Mai, or Phuket, the major capitals, and then spend a few more days in Phnom Penh or Siam Reap in Cambodia, or Luang Prabang or Vientiane in Laos, or even Yangon or Mandalay in Myanmar. Or Vietnam also upcoming as well in terms of the tourism profile. Given that they know the brands here in Thailand already, I think it's a good strategy that we will penetrate that into the region where our tourists also go. So the Phnom Penh projects, the 3 branches, one is already opened last week and 2 more is scheduled to open in second quarter of this year. So with the pipelines currently, we will have 5 new overseas outlets open within the first half of this year. For other regions in China and in other countries, we are in talk with some other partners as well in establishing the brand. So adding on to the revenue streams, the first one is the upfront fee. The second one is the monthly royalty fee, which is applied for both for China and in Cambodia. So it's ranging from 5 to 10% depending on the country. And this one we help to do quarterly audit to ensure that the standards are complied with our standard of operations procedures. okay, to ensure that the brand has been executed well in the overseas. So in short term, we are thinking of doing it as a franchise because it's the lowest risk strategy in tapping the overseas market. But in medium to long term, we believe that other business model like joint venture or even greenfield is also possible. But we have to understand the rules and regulations of each market in more details in order to develop that. So I guess now there's about 4 minutes left. So if any questions, you can pop in. I can help clarify the issues. Okay. So in the meantime, while we're waiting for the questions, so maybe I'll just tell you a little bit more about our business in details. So any questions, please feel free to pop in. So Rarin Jinda is our top scale brand. We established that back in 2017. At that time, after we operated Let's Relax for 10 years, we had some demands from customers who want a more premium spa experience with more exclusive or more privacy in their treatment. As well as we believe that innovative wellness spa is a trend for the future, where we incorporate the latest trends or spa technologies from around the world with our true knowledge of Thai spa, whether it be the Thai massage techniques or the Thai herbs, in combining a premium and innovative spa experience that customers are seeking after. So in this spa, we are not only offering the regular spa treatments you will see in regular spa like aromatherapy, oil massage, Thai massage, foot massage, but we also adding some more innovative treatments, whether it be like the sound therapy, as you see in the picture here, some hydrotherapy treatments, some technologies. Okay. There's one question, so I'll come back. The breakdown of margins amongst the 3 brands. Let's Relax still has the highest margin, roughly about 40%, given that it has quite a scale of 27 branches. Rarin Jinda, our top scale brand, is currently experiencing about 25% gross margin because it's located in prime CBD area. So the cost of rental is relatively higher than Let's Relax, and cost of service is relatively higher, given that the decor is more expensive and the cost of raw material is more premium level. Okay, whereas our Ban Suan Massage is currently achieving gross profit margin of 15%. It's relatively low at the moment, given that we acquired it back in 2015. On normal circumstances, we normally get a long-term lease of 9 to 12 years. But when we acquire the 4 branches, some branches has 2 years left, 3 years left, 5 years left. So the cost of depreciation is relatively high. In our accounting, we accounted the cost of accounted the depreciation in the cost of goods sold. So that's why the gross profit margin of the brand and net profits is not really different. So there's only SG&A and admin costs at the branches that is accumulated. It's a difference between net profit margin and gross profit margin. Can you comment on local chain competition? Also, what's the barriers of entry? Local chains is quite difficult to develop because most chains don't spend too much in developing a system. In the past, Thai spa business has been a cash generating business. Basically, many SME owners believe that the owners has to be there, whether it be the owners in the first shop, the wife in the second shop, and whatsoever. So what we differentiate from others is we develop our own in-house operating system, where the management is able to leverage on all the stakeholders in the spa, whether it be customers, staff, therapists, P&L, CRM, for example. So this one helps us to expand the branches quicker than competitors. I'm sure that the barriers to entry is relatively low. If you have capital, I think you can open a spa, but to build it sustainably, there are several key success factors that help us have a success, such as brand, systems, and locations, for example. Recently, the Thai government has launched a new SPA Act where there are more regulations in opening a new spa, whether it be the certification of the therapist, the certification of spa manager, and the premises has to be certified. So I guess there will be larger barriers to entry to enter the market. So thank you very much for joining today. ขอบคุณครับ สวัสดีครับ